Hey, what's going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and today's video is going to be awesome. We're going to be digging into an article from Zillow that talks about how the housing market is shifting, and we're reaching an inflection point that is bringing us to a more balanced market. Now, if you are new to the channel and you like all things finance, real estate, and investing, please hit that like button, hit that subscribe button, and if you haven't done so in the past, please consider leaving a comment. Your comments really help me as well as others learn and grow. And without further ado, let's jump right to that article. All right, so up on the screen, I have the article from Zillow. I will link to this in the show notes so that you can read it yourself, but let's dig in and go over this here. It says that annual home price appreciation has accelerated to record highs in each of the past 12 months. And that's after surpassing the mid-2000s housing bubble high watermark of 11.9% in April of 2021. So what this article is saying is that we have seen more price appreciation than we did leading up to the great financial crisis. It goes on to say that the run of records is likely to end soon as the housing market passes an inflection point. That doesn't mean a housing crash is coming or even that housing prices will fall, but rather that the pace of price growth is likely to decelerate and more homes will be available for sale. This rebalancing would be welcome news for buyers, especially those that want to purchase their first home. Now, the article goes on to talk about the rising levels of inventory, and it describes inventory as a barometer to measure the supply versus the demand. When demand persistently outstrips supply, the stock of homes available for sale is depleted. And that's exactly what the market has experienced over the past year and a half. So we have seen very little housing supply, we've seen a huge buyer demand, and as a result, those homes are flying off the shelf and they are selling at record high prices. Now, after months and months of really low housing inventory, we finally are starting to see a rise in March, not just following seasonal trends, but increasing enough to begin closing the gap with inventory levels from a year ago. Now, it looks likely that the inventory will notch year-over-year growth sometime later in 2022, which hasn't occurred since September of 2019. And the chart that they give here is the raw active listings across the United States. You can see that leading into May of 2022, we still have less than 1 million homes available for sale, but it is quickly approaching the 2021 levels. So we are starting to see that level tick up a little bit with this chart here. We still have a long ways to go to get to the levels that we saw prior to the pandemic in 2019, where we had about 1.8 million housing units available for sale. The article goes on to say that more inventory is both a consequence and the cause of a more balanced housing market. It gives home shoppers more options to choose from, limiting the number of buyers bidding on each home. And it lights a competitive fire under sellers and their listing agents to make their homes shine and to be wary of overpricing. Little side note here, I actually think that that is what is going on in a lot of these markets right now, because sellers are looking in the rearview mirror and they're seeing, hey, these homes sold for this price, I'm going to go ahead and punch mine out at a higher price because the market is so hot right now. And as a result, we're starting to see some of those price reductions. And I think in many cases, not all, but some of those price reductions are coming because they were not priced correctly to begin with. In addition to that, the article is saying that the inventory may increase enough later this year to slow the pace of the market. Now, great question here. How far does it still have to go? The pendulum might finally be starting to swing back toward a more balanced housing market, but it will take time to get there, and prospective buyers still won't find much reason to cheer, as higher interest rates will keep home ownership costly. And slowing price growth is unlikely to end with falling prices. So if you're looking at the market holistically right now, we are starting to see the inventory notch up slightly, but it is still far under what we would consider a buyer's market. Generally speaking, anything less than 3 months is what we would consider a seller's market. It's pretty much been a seller's market for the last few years, easily, because inventory has been very, very low. In addition to that, we've seen mortgage rates drop and drop and drop going into the pandemic and over the last couple of years, but more recently we've seen this massive spike. That massive spike is putting a ton of pressure on would-be home buyers. In particular, it is really starting to impact the first-time home buyer because in other videos that I've done recently and other stats that I've read, the share of first-time home buyers in this market is continuing to drop year over year. Just a year or two ago, the first-time home buyers made up about 33% of the market. That number is now fallen under 30%. I believe it's sitting at about 28% right now. Now, market goes on to say, how long will it take? Well, if inventory reaches the same month 2021 levels this summer or fall, that will still leave inventory down about 1/3 from normal pre-pandemic levels. So at the pace of inventory recovering observed in March, inventory would take about 30 months to reach 2019 levels. So 30 months, that's nearly 3 years. So for those of you who don't know, in general, real estate does move very, very slow. This has been an unprecedented spike in mortgage interest rate. It sort of destroyed some of the home buyer demand that we had, and I think that was the goal of the Fed, is to slow things down a little bit. But even if you look at how real estate went down after the great financial crisis, we saw a pretty large reduction in prices in 2008, but home prices didn't actually bottom until 2012. So what was that? It took 4, 5, 6 years for that market to really shake out before we hit the bottom and started climbing up again. And then wrapping up the article, it asked the question, is this a bubble and is it about to pop? It says no, and in fact, the expectation of another crash could contribute to keeping homes so unaffordable. Builders have been firing on all cylinders, and with more homes under construction than any time since 1973, they understandably feel exposed in the event of a housing downturn. If they trim their construction plans out of caution, we will miss out on one of the best hopes we have for net new inventory on the market, and the inventory crunch that's helped push prices up will persist for longer than expected. If prices did begin to fall, we do know that there are millions of first-time homebuyers or younger millennials soon to be aging into this situation, waiting in the wings to snap up homes if they see a bargain. Those first-time homebuyers will continue to feel the pressure from rising rents, which jumped 17% in just the past 12 months alone. And generally high inflation environment will keep home ownership looking attractive as a hedge against inflation. Further, it says that most existing homeowners are insulated from high mortgage rates thanks to more than 90% of loans in the past several years being vanilla 30-year fixed rate, fully amortizing mortgages. And if any of them, of course, have refinanced in the past 12 to 24 months, they're probably sitting at an all-time record low, somewhere around 3%, maybe even in the 2s. So great article. They make a few really key points here. One thing that I did want to mention and bring at least my own personal view on is they talk about generally high inflation being good for home ownership. Now, in general, real estate is a really good hedge against inflation. However, when you see the cost of all goods and services go up dramatically like we have over the last 12 to 18 months, it really squeezes home buyers because not only have mortgage rates have gone up and put them in a position where it costs more to own a property, well, the cost of everything else, energy, food, their vehicles, their insurance, everything is going up in price. Now, I know many would argue that home prices generally follow inflation, and that is true in many cases. However, if wages, their income does not rise along with that inflation, they're going to be put in a spot where things become more and more unaffordable, and home ownership goes further and further out of reach. So anyway, that is going to wrap up the video today. What did you think of the article from Zillow and their base case that home prices are not necessarily likely to drop dramatically and the rising inventory is just going to create a more balanced market? Do you agree with that, or do you think we're in more of a bubble, and do you think that prices are going to drop dramatically? Please leave your comments below. They really help me as well as others learn and grow. And if you haven't done so already, please hit that like button and that subscribe button. We'll see you on the next video.